will be on the screen, and I'll be happy to communicate with you and help you in any way I can. So again, that's the third major thing that title insurance covers. Now that we covered the three main areas that title insurance covers, I want to get into some of the more specifics, both about the policies and various things related to the title search and the title report. Understand that although I covered three main areas, that isn't everything. There are other things that title insurance covers, marketable title, other types of things, but I'm going to leave that for a more advanced version of the class that you can come back and take. If this is Title Insurance 101, you'll come back and take my Title Insurance 201 and Title Insurance 301 classes. But those are the three main big areas of coverage that a title insurance policy protects against. Now I'm going to get into some of the little more nitty-gritty things, some things I've touched on a little bit briefly, and I'm going to elaborate on some of them, amplify some of the things we've talked about. So I've talked a couple of times about the fact that there's actually more than one title insurance policy at any given closing. And again, I'm going to talk about two. There's really more types of policies. There are other hybrid products that title insurance companies sell and provide. I'm really going to talk about the two main types of policies. The first one we've discussed at some great length, and that's an owner's policy, sometimes called a fee policy. That's exactly what it sounds like. It ensures to the owner of the property that they really have fee simple ownership of the property. So fee having to do with the ownership, owner's policy, the beneficiary is the owner pays for it, you pay for it, the buyer pays for it, and ensures to you that you own the property, that you're really vested in title, that there are no liens and encumbrances, that you have full legal use and access to the property, all the things that we've been talking about up until this point. If you're buying a property for all cash, that $500,000 house that you bought, you took $500,000 out of your pocket and purchased it, that's the only policy you're going to get. It's going to be an owner's policy at the table, single policy. In most cases, most people get a mortgage when they buy a piece of property. Obviously not all cases, purely circumstantial, but in most cases people get a mortgage. And if that's the case, there'll be a second policy at the table called a mortgage policy, sometimes also called a lender's policy. Mortgage lender's policy ensures to the bank that the bank has the same assurances or many of the same assurances that you have under your owner's policy, and they care about a lot of the same things you care about. They care about the fact that you have full use and access to the property. They care that there are no liens of encumbrances. They care that you're really vested in title. But there's some other things that the bank cares about that you could care less about, or if, in fact, you actually wish weren't the case, and that is the bank wants to make sure that they are in the position they think they're in, and the reason they want to make sure they're in the position is they want to make sure that they have the ability to foreclose on this property if they ever need to do so, and to take back exactly the collateral that they thought they were lending upon. So a bank is going to want to make sure that they could foreclose on the property, which of course you could care less about, and in fact you probably wish they couldn't foreclose on the property if you really think about it. And second, the bank's going to want to make sure that they're in the position that they think they're in. And so we are going to give them a title insurance policy. It says you are in first priority position. There is no other, superior lien to yours, no other superior, mortgage or anything to yours. Or it's a second loan, or third mortgage, or fourth mortgage, whatever the case might be. You're in second position, or third position, or fourth position. We're going to ensure the bank that's the case. Very, very important, because the bank has concerns that differ from that of the owner. One thing that I'll point out at this point, and we'll touch on it again a little bit later during this program, is something that the bank cares a lot about, that you care about, but the title company doesn't care all that much about. And I'm talking about C of O's, certificates of occupancy.